All right, people, hello and welcome to a new YouTube video. So what I'm going to do today is I'm going to do some fundamental analysis, some technical analysis right in front of you. So we're going to run through the fundamentals and we're going to generate some trade ideas, right? So I've got a sheet here. I've come prepared. So if you've watched my other videos, you know that Sunday and Monday morning, I do all my fundamental analysis for the week. I'm reading bank reports. I'm going through Forex Factory. I'm checking the news. I'm preparing and generating my trade ideas for the week ahead. And this is a little snippet into that. So this document is a snippet into that. Now, on this document, I've only included USD, Euro, JPY, and that is it. And gold. I just missed that gold. And the reason is because these are the ones I'm actually most interested in. I also do all the other major currencies. I also do the S&P, a few other markets. And basically, I do oil as well, for example. I do a lot of analysis across a load of different assets. But today I'm going to focus on what I'm actually really looking at this week because it interests me. Because it's basically the data, the fundamentals is showing me that these are the most interesting pairs or the most interesting currencies and assets to trade. So let's get into it. I'm going to start on the most important, as always, US dollar. So basically with the US dollar, what we have this week is we're coming off the inflation data from last week. So last week we had CPI come out hotter than expected, and we also had PPI come out hotter than expected, right? So in Forex Factory, you can see that we had core CPI, or better to look at CPI year over year, 3.1%, above forecast, below the previous, but still above forecast and not yet at the Fed's target of 2%. And we did have retail sales come out weaker than expected, so that was not good. But we then also saw core PPI come out again hotter than expected, right? So basically, how I'm seeing it with the US is the following: we've got inflation remaining sticky. And we've got very robust growth data. And overall, what this means is Fed rate cut expectations are to basically, they're going to keep rate cuts higher for longer, right? And this is bullish US dollar. The only data point that has counteracted that as of recently was this core retail sales data coming out weaker than expected. But I don't think that's really enough to shift the bias for me. It's nowhere near enough. In fact, we're going to need a continuous string of data. We're going to need, for example, really weak PMI data. We're going to need some comments from the Fed. We're going to need to see PCE, wherever PCE is, core PCE. We're going to need to see that drop. We need to see a lot of changes before my bias on US dollar shifts. At the moment, it remains very strong. So I'll just put that in here, bullish, right? Bullish US dollar. Then basically now we need to trade something with that. So what are we going to pair that with? Well, we're going to pair it with these three. That is what I am looking at. So Euro in the Eurozone, basically we have the following. We have CPI is at about 2.8%, which is actually lower than a lot of the other major currencies. So that's one thing to note. The other thing we have in the Eurozone is very weak economic data, very recessionary data, which basically we've got the situation where now CPI is pretty close to target and the economy is looking very weak. And to me, it's all screaming that the ECB, European Central Bank, it's pretty likely they're going to be cutting rates sooner than the other currencies. And I think that's going to be leading to a weaker euro in comparison to the US dollar, which is what I'm going to be looking to trade euro against. Then we've got JPY, Bank of Japan is basically, there's no signs they're going to drop their ultra loose monetary policy. So if you don't know, Japan have kept their rates. Where do I find this again? Just 1 second. Market. It normally says, oh, here we go. So if you don't know, but Japan has actually kept their interest rates negative, right? While all the other major currencies have been increasing the rates, with the exception of Swiss franc, Japan has kept their rates negative, right? And there doesn't seem to be any signs that they're going to be changing that anytime soon. Now they will eventually, but when will they do that? Well, we have to wait for the data to show that it's likely that they're going to be changing it soon and start to raise rates. And until then, I remain bearish on Japanese yen. So I'm going to put that in here. I'm going to put that in here. And then the next one is gold. So with gold, basically, we've got the following. So the main thing to look at with gold is risk sentiment and just general market sentiment and fear, right? And at the moment, we don't have many escalations. We've had no war escalations. We've had little increase in tensions in the Middle East. And that is basically bringing in some weak gold. There's not much inflows in the gold. And on top of that, with the strong US data, that's reducing any recessionary fears in the US. So overall, it's making for a relatively weak gold. And with the US dollar remaining strong, I think we're going to see continued downside in the medium term for gold. So at the moment, I am bearish on gold. So basically what you are seeing here is I'm bearish gold, bearish JPY, bearish euro, and I'm bullish US dollar. And basically, this is now my watch list for the week. So my watch list is Euro USD, USD JPY, and XAU USD. Those are my main pairs for the week. So I'm going to get into some technical analysis very shortly. But just before I do that, there's another important component that I want to look at and show you guys. So I made a recent tweet sending out all the COT data for all the major currencies. And now I'm going to just show you briefly how I look at this data and how I use this for my analysis. So as I said, I'm bearish gold, but look at this. We have a 71.6% longs, right? From the major players in the US. That's very insightful. However, we have also a minus 5.8% net change this week, right? Basically signaling that a lot of longs are being closed out. And this could be, a lot of things, but that's something to take note of. And the way I internalize this is, okay, longer term, we might have a lot of players that are long. But in the medium to short term, we could have some bias shifts. And this is why I'm using this. I'm going to be trying to play off this minus 5.8% net change and to look for some medium term shorts on gold. Then when it comes to euro, we've got 57% long and minus 1.9%. Again, overall long, but net change decreasing. So again, it's not overly large confluence, but we are seeing decreases in the net change, which to me is at least signaling we're going to see some short to medium term bearishness. Again, this is not exactly how the COT data works, right? Just because you get these data shifts doesn't mean it's just going to go down. But I like to use it as a confluence to consider, especially with the outlook at how far I'm looking out on these trades. And this just shows you, right, there's been some closing of longs, right? And then with the US dollar, it's 52.5% long and a small net change. So again, this isn't really that insightful, basically showing 50-50. And Japanese yen is extremely small amount long. So that's 75% short, and it's decreased in the last week. So again, just an interesting point. Overall, I think this does support my trades. I focus on the fundamentals. I use COT data as an additional confluence. I also use some other data points. but just gonna keep it simple here. But overall, this net change category is very, very interesting to me. -6%, that's a big decrease for gold. And yeah, so as you can see, this is overall, it's giving some confidence to my trades, but of course the net positioning is not in my favor in most of the instances, but the net changes are, so something to consider, right? But anyways, you can see what I'm looking at. Now let's get into the charts. So we'll start on Euro USD. Doesn't really matter. Let's start on the daily. So as I said, I'm bearish Euro USD because I'm bullish US dollar and I'm bearish Euro. So I'm bearish Euro USD. Now I've had this bias for basically since the start of 2024, more or less. Ever since we had this break of structure, I've maintained a bearish stance on Euro USD. Now I was actually looking for sells in here, didn't get them, and now I'm looking for sells right here. And you can see I put at this position. So basically what I saw, we had this break of structure, very nice break of structure. We took out this low to the left, but we're kind of retracing back in. Now, I think there's a pretty decent chance we're going to see a reaction from here. We sweep these high, a reaction from here, and continuations back down to at least this support level, right? Whether we break through that is going to likely depend on data, but you know, it's going to likely depend on, let's see what data is going to depend on. Yeah, this is going to be important, and also, one sec. Yeah, so Euro, so this is going to be really important for this trade, and also, sorry, that's last week's. Also the FOMC minutes and the PMI data for the US. So that's going to be important. But listen, the way I trade, the way I do it is I stick with the data. Until the data shifts, I'm going to be taking trades, and until the data shows me otherwise, I'm going to be staying in that trade, right? So with Euro USD, it's all shorts for me at the moment, and I'm going to be looking for entries right in here. I'm actively looking, in fact, at entries over here. What I've been waiting for, it's come into my area of interest. I've just been waiting for a little reaction from this area. So on the 4 hour, if we get a couple of candles in the direction, my direction, some bearish price action, I'll be looking to take shorts. So that is what I'm looking at. And my TP is going to be over here at the lows, and my stop loss will be up with this high, more or less. Obviously, when I take the trade, I'm going to set those. Next, let's look at USD JPY. So as I said, I'm bearish JPY, I'm bullish US dollar. So I'm looking for longs. Now we're going to start on the daily, and as you can see on the daily, we are pretty overextended, and we've been continuing this trend since the start of 2024. I don't expect that to stop. But I do think we're a little bit overextended, and I would like to see some retracements, and I would actually like to see price to come all the way back down to here. Now, are we going to get that? I don't know. I don't think we're going to get that this week. But at the very least, I'm going to want to see price come into here. So what I do is I mark out the areas that I want to see price come to. So I'm going to wait for price to come to here, going to wait for it to come to here. And once we get in there, then I'm looking for some lower time frame price action, normally on the 1 hour, right? So yeah, if we can get price come into this level, so I'll just correct it here. If we can get price come into this level, then perfect. That'll be a nice sweep of this low. We'll come into this level and hopefully get some price action, and then I'll look to take price higher, and I'll be targeting up at these highs to the left, right? Exact same goes if we come all the way down here. And I'm going to follow the fundamentals. People will say, oh, it's shifted bearish. In my eyes, no, it hasn't. It hasn't shifted bearish until the data has changed. So next, we've got, what else did I say? Gold. Oh, yes, gold. So this is the last pair. So the last pair is gold. And as you can see, I've already marked out the exact trade I'm looking for. So let's start on the daily. And on the daily, you can basically see that we've had this very nice drive down in the previous month. Really nice. We broke this low to the left. Right over here. We broke this low to the left. We've held below, but we've since retraced back in with some very strong price action. Now, I'm not going to sell into this. I'm going to wait for a little shift in momentum to then get in. But I think this is a great level, this break and retest of this support that we took out. And hopefully we can get a reaction. So on the 4 hour, as you can see, if we can sweep this high, I think that's entirely possible. We sweep this high, get some bearish price action. I will then look to take price all the way back to these lows to the left, right over here. So basically, that's it, guys. That's how I do it. I look at the fundamentals, I go in depth. Obviously, this is a simplified version. This takes a lot of work. This takes a lot of effort. This takes a lot of in-depth analysis, a lot of reading to get to this point. But I do this fundamental analysis. I look at the COT data. I look at some other data points. I also look at, for example, retail positioning. I look at all these data points. I formulate a bias. I basically create a short list, a watch list of pairs. And then I look at the technicals. I wait for price to come into areas of interest. And then I look for confirmations. And it's as simple as that. It's as simple as that. And yeah, so let's see how these play out. Let's see if I get some entries. I hope you find this insightful. And until next time, cheerio.